Hey mate, hope you're doing well today as always. Today, technical tips and explanation. Once again, most of my videos are about mindset in trading and what this life is really is, but I still gonna give you advice sometimes to improve your overview of the market and potentially your trading. Don't forget, never underestimate knowledge in trading, even if you don't ending using it, if you prefer not to, if you're already comfortable in your different setup you currently have. And today, I want to explain how, back in the day, beginning of 2023, my mentors actually at the time predicted the BTC bottom just by watching the chart, and how you can use this technique and this way to see the market to increase potentially your win rate in your trade. Let's jump into it. So like I said, it was March 2023 and the BTC on the weekly time frame looked like this. I wasn't profitable yet, I wasn't using this technique also, but my mentors told me we were probably at the bottom on BTC once we closed this weekly candle just by looking the chart and using RSI and divergence. And now I'm going to tell you what people usually don't know about them and why you shouldn't underestimate this. First, what people usually know, RSI or Relative Strength Index is a momentum tool. Look at the bottom of my screen and it shows basically if price is moving too far, too fast, over both above 70 like here, oversold below 30 like here. Simple way to spot when a market might be ready to reverse. And divergence is when the market moves on the other way than the RSI. So, for example, market creates a new high, but we have a lower high on the RSI, then we have a bearish divergence. The other way around, market creates a lower low, but we have a higher low on the RSI, then we have a bullish divergence. So that's what most people know. So what people don't always know is that for divergence trader, it's only interesting when we break the divergence. That means for bearish divergence, it's when we break the lower point between our two or more divergence points, like we did on BTC back in the day when we weren't bullish anymore. So this time, using this technique on a weekly time frame wasn't enough to have a good setup, basically because the divergence took too much time to create itself. And for bullish divergence, it's when we break the higher point between our two or more divergence points, like we did around March 2023. And see what BTC did since. It's basically since March 2023 that divergence traders are bullish on BTC. So now I'm gonna give you the rules and trap to avoid using divergence trading. First, the most crucial one is you need a candle close to validate that we broke the divergence. A weak SFP, call it like you want, but it's not enough. Like, for example, this one on BTC, when we were bullish, we only broke the divergence on this candle because it's the first one who closed under the lower point between our two divergence points. Also, on BTC, since we are bullish, we already had sometimes weekly divergence against us. But look, we never validated with a candle close. Rule number 2, what are the targets when we trade with divergence? Well, with a bearish divergence, it's all the candle bearish on field on the leg who bring the divergence. So, for example, on our bearish divergence on BTC we took this one, because I look at the RSI, it's what bring the divergence. We also had other target, but as we're gonna see later, something cancel our plan. And with a bullish divergence, it's the other way around. The target are all the bullish candle on field, also on the leg to bring the divergence. So, for example, on BTC, we had actually two targets, this one and the eye. Rule number 3, what can cancel our divergence plan? Well, it's simple. First, it's if we have a divergence setup valid when we break against us. Like we said on BTC, since we're bullish, we already had some weekly divergence, but never valid with a candle close. Also, when we don't have any target left, and the rest of the time we lose because that the trading game, we only play the probabilities. And last, it's not really a rule but more a guideline, you need to complete this with knowledge in a yield wave, price action, and any liquidity system you like people always praise ICT. I personally learn SMC, the one you prefer. So to conclude, I think divergence trading, it's a great way to start with trading if you're a beginner, because you're gonna understand a lot of things on how the market move, especially on high time frame. It's easy, simple, you don't have a lot of liquidity explanation, but even as an experienced trader, I think it's a great thing to have in mind, because many times you're gonna open a trade and you have a divergence against you and you don't realize it. It's maybe why you took the SL. I personally never open a trade if I don't have a divergence on my side. For example, if I trade price action, when the price action shift, I want that it break at the same time divergence on my side. If I trade SMC, it's better when we shush that it was also when we break a divergence. It's always a great thing to know if you want to improve once again your win rate and avoid the odd for you. And that's all for me today. I hope you learned something. Tell me if you were aware of everything I told you about RSI and divergence. I think too much people underestimate what RSI and divergence can bring to their trading. I think it's always useful to know. Try it. Tell me what you think. And good luck on your trade if you're trading today. And see you soon, mate.